Hello and welcome to AI Market News by LM. Okay, let's just get right into it. Global markets are a sea of red right now. The US dollar is on an absolute tear, and it's got everybody asking one huge question. Why is King Dollar making such a dramatic comeback? And is the yen really, actually heading for 160? We're gonna break it all down.
You know, this quote really just says it all, doesn't it? What we're seeing is a massive market sell-off. It's like a firestorm of fear that's been kicked off by the escalating conflict in the Middle East and the shockwave it's sent through oil prices.
And all this has triggered what we call a classic risk-off environment. That's when investors are basically dumping anything they see as risky and just running for the exits. The damage, especially over in Asia, has been really severe.
I mean, just look at this. The sheer scale of the pain is staggering, particularly in South Korea. The Kospi index is getting absolutely hammered, and this is marking its biggest two-day crash since the 2008 financial crisis. The panic got so intense that authorities actually had to trigger circuit breakers, this temporary halts in trading, just to try and get things to calm down.
And this data right here really shows that the damage is everywhere. We're seeing almost 70% of stocks going down, with the number of stocks hitting new lows just blowing away those at new highs. So this isn't just about a few tech stocks getting hit. This is a broad-based market liquidation. The whole thing is selling off.
So in times of total chaos like this, where does all that capital go? Well, it searches for safety, and that leads to what we call a flight to safety.
And investors, they instinctively look for that safe haven, right? A port in the storm. Traditionally, that might mean jumping into assets like gold or the Japanese yen. But this time, the old playbook is kind of being torn up.
And here we can see exactly why. The US dollar is just crushing the competition. The yen, which is usually a haven, is actually getting weaker. Even gold is being sold off. It just can't stand up to the dollar's incredible strength. The big takeaway here is this: the dollar is reclaiming its throne as the undisputed king of safe havens. Period.
Now, this incredible dollar rally isn't happening in a vacuum. It's creating these massive ripple effects all across the globe, which brings us right to the big question in our title: the incredible pressure on the Japanese yen.
So let's tackle this head-on. With the dollar just surging like this, the Japanese yen is getting squeezed, and it's getting squeezed hard.
The US dollar just recently soared to this level against the yen. And the yen is uniquely vulnerable right now for a couple of key reasons. First, Japan is a massive energy importer. They get a huge portion of their crude oil from the Middle East, so spiking oil prices are a direct hit to their economy. But there's another huge factor: policy divergence. While the US Fed is keeping rates high, the Bank of Japan has kept its ultra-loose monetary policy. This big difference in interest rates just makes holding dollars way more attractive than holding yen, and that's just adding fuel to the fire.
And listen, it's not just the yen. This dollar shockwave is being felt all across the region, especially in emerging markets. The Korean won is getting hammered, and currencies from Taiwan all the way to Thailand are under some really intense pressure.
Now, a strong dollar and spiking oil prices, well, that creates a massive headache for the world's central banks, and maybe most importantly, for the US Federal Reserve. We can see the whole chain reaction laid out right here. The conflict ignites an oil price shock, which then brings fears of inflation roaring back to life. And this puts the Fed in a very tough spot. It makes it much harder for them to justify cutting interest rates like everyone was hoping.
And that uncertainty? It's coming directly from Fed officials themselves. As Minneapolis Fed Chair Neil Kashkari said, they just don't know enough yet. They need more data. What that really means is that the path for rate cuts this year, which the market felt so confident about just a few weeks ago, is now completely up in the air.
So, with all this uncertainty flooding around, what should we be watching next? Let's turn to the economic radar and see what's on the horizon.
All right, looking at the investing.com calendar, this Wednesday, March 4th, is shaping up to be a big one. We'll get the ADP report, which gives us an early look at the US labor market. Then we get the ISM Services PMI, a super crucial indicator since, the service sector is the biggest part of the US economy. And finally, the Fed's own Beige Book will be released. This isn't hard data. It's more like a collection of economic stories from the ground, giving us a real-world feel that the Fed watches very closely. All three of these are going to be vital for shaping what happens next.
So, to wrap this all up, geopolitical turmoil has sent markets into a classic risk-off panic. But instead of flocking to the usual safe places, investors are all piling into one asset, the US dollar.
This is putting immense pressure on currencies like the yen, and it's seriously complicating the Fed's plan to cut rates, which leaves us with one final big question. In a world that feels more and more risky, can anything out there truly challenge the reign of King Dollar?
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. If you found this explainer helpful, don't forget to like and subscribe for more.